Two new reforms will ensure that consumers are treated fairly and ethically by financial product advisors, the federal government claims. The design and distribution obligations and the product intervention power should ensure that financial service products are targeted and sold to the right customers. ASIC will be empowered to intervene in instances where a product has been inappropriately sold in order to prevent harm to the customer. The design and distribution obligations will require issuers of financial products to identify targets for their products, having regard to the features of the products and consumers in those markets, select appropriate distribution channels, and periodically review arrangements to ensure they continue to be appropriate. The product intervention power will enable ASIC to intervene in the distribution of a product where it perceives a risk of significant consumer detriment, the Minister for Revenue and Financial Services, Kelly O'Dwyer, said. The actions ASIC could take include requiring the amendment of product marketing and disclosure materials, imposing consumer warnings and labelling changes, restricting how a product is distributed, and banning products. Simplification of the taxation of financial arrangements, or TOFA, rules have been delayed. The TOFA rules provide the tax treatment on gains and losses of financial arrangements and generally apply to large taxpayers. Originally due to come to force for income years commencing on or after the 1st of January 2018, the reforms have been delayed until legislation passes Parliament and gains royal assent. The Minister for Revenue and Financial Services, Kelly O'Dwyer, blamed the delay on the government's extensive legislative programme. The Bank of Japan's board members voted 8-1 to continue with its aggressive stimulus programme at its December 27 meeting. Their decision came as Japan's monetary base increased for the 11th consecutive year to an all-time high. The monetary base is the total amount of money in circulation and the total amount of commercial bank deposits held at the central bank. At the end of December 2017, Japan's monetary base stood at 480 trillion yen, or 5.4 trillion Australian dollars, an increase of 9.7% from 2016. Bank of Japan Governor Haruhiko Kuroda promised to keep the stimulus going until inflation reached the target rate of 2%. The short-term policy interest rate has a negative interest rate of minus 0.1%. Australia private credit grew by 5.4% year-on-year in November, beating the predicted growth of 5.2%, RBA data reveals. On a month-to-month basis, private credit rose to 0.5% compared with 0.4% in October. Business credit grew at the fastest pace from 0.4% in October to 0.7% in November. However, housing borrowing slowed from 0.5% to 0.4%. On a yearly basis, housing credit rose 6.4% and business grew 4.7%. On the other hand, personal credit fell 1.2%. Meanwhile, the yearly growth in broad money supply slowed to 6% from 6.3% in 2016. The FBA has 8 areas of focus for 2018, according to its Head of Policy and Government Relations, Ben Marshan. The big issue for the FBA in 2018 is supporting the Financial Advisor Standards and Ethics Authority. The FBA's other 7 areas of focus are assisting ASIC's implementation of code monitoring bodies, the implementation of the Australian Financial Complaints Authority, rising regulatory costs, the ASIC enforcement review, renaming general advice to product information, reviewing old retail and wholesale definitions, helping members understand and implement fintech, and the Royal Commission into Misconduct in Banking, Superannuation and Financial Services. The federal government and consumer groups declared the Insurance in Superannuation Voluntary Code of Practice a dud, making regulatory intervention in the sector likely. The code was meant to restore consumer confidence in insurance offered through superannuation after poor claims experiences and erosion of retirement savings caused by inappropriate insurance and restrictive definitions. A draft code put out in mid-2017 was stronger, but the final code went through serious changes. One of the most important was that it became non-binding, meaning there was no obligation for a super fund or insurer to adopt the watered-down practices. The code was slammed as unenforceable by consumer advocacy group Choice Campaigns and Policy Team Lead Xavier O'Halloran. Choice had spent a year consulting with the Insurance and Superannuation Working Group on the code. The Minister for Revenue and Financial Services, Kelly O'Dwyer, was also scathing. She said the government will consider an appropriate regulatory response in light of the industry's position. ASIC has issued guidance that compels AFS licensees to manage conflicts of interest and inside information when providing sell-side research. Regulatory Guide 264, Sell-Side Research, gives greater clarity about how to manage conflicts of interest in the key stages of capital raising, including the preparation and production of investor education reports. The guidance states that in the course of their work, research analysts regularly interact with and obtain information from companies, with the risk that it may be inside information. In addition, the AFS licensee's interests may conflict with investors, including potential clients' interests, which, if not properly handled, could negatively affect the integrity of the market. The industry has until the 1st of July 2018 to make sure their compliance measures meet the regulators' updated expectations.